Welcome back, and we welcome our expert for the morning. Prakash Diwan joins us now. Good morning, Prakash, and so good to speak to you yet again. Well, can I start with steel? The DGTR has initiated the first moves towards a possible anti-dumping duty. Will you go long on metals?
Good morning, Lata. Great to be on the show with you. Yes, I think this was an area that has been a very contentious kind of a thing with most steel players. In fact, some of them have gone on record by saying that if this is not done at this point in time in their life cycle, it's going to be extremely debilitating for them to be able to grow. And my sense is the government has done rightfully. It's taken the right steps in terms of first investigating which pockets need to be addressed, and then kind of start working around the metrics around this. So it's positive. Now, whether to go long on steel or not, just on the basis of this particular trigger, the question will be whether you otherwise have a longer term orientation on the steel consumption in India going up. And my sense is it is positive for most larger players who have reached scale. And particularly if you look at JSPL, JSW, even Tata Steel to a large extent, very lean balance sheets, great kind of visibility of how they're going to manage the production enhancements. So it's quite positive. But as I said, don't buy just on the basis of this, because this will end up becoming a bit of a short-term impulse. But you would need to have a long-term orientation, which also aligns with the positive framework.
Okay. Speaking of JSW Steel, today is a big day for the Sensex, right? Because we're seeing changes on the index. They're effective today, as in they were effective end of trade Friday. So Zomato is in, JSW is out. And for the reference, just want to place the numbers. I mean, the estimates that were doing the rounds, Novama, for instance, said that this will lead to passive flows. All the, passive funds that track the Nifty 50, the Sensex 30, it will lead to passive inflows of about 512 thereabouts on Zomato and an outflow of about $250 million on JSW Steel. So it's a big day. I mean, it really announces the arrival of quick commerce, Zomato, food delivery. I mean, look at how it's listed. Big day for Zomato.
Just a trivia. I went back several times. Usually on the day when you enter the big index, you peak off.
Yes.
Because the run-up is there.
Yes.
And it may be bottoming out. But anyway, I'll leave it to Prakash.
Prakash, your thoughts? Still Zomato or Swiggy? Both? Neither?
Oh, no, absolutely. You can't avoid this segment. I mean, as you rightly said, new age companies are finally making their entry presence felt in the indices. Zomato could probably consolidate from here, where Swiggy probably, reduces the gap in terms of valuation between itself and Zomato. Remember one thing, we have been talking about competition coming in, but when I look at, for example, if you are in Bangalore, in certain parts of Bangalore, in Electronic City and all, Blinkit still doesn't make it, but Swiggy does. So, and there'll be areas where Blinkit makes a lot of difference and Swiggy doesn't. So the market is so massive. I doubt if, the competition is as hyper intensive as it's been made to look. It's the back end operations and all which will need to kind of be much more robust as they grow to spur this kind of a growth. So from that perspective, Zomato gives you that comfort. They've got a head start. They've done so well. They've made mistakes, learned from it. Swiggy might take some longer time to do that, but I would love to buy Zomato if Lata is right, and if this peaks out and then there is some sort of a consolidation, time correction, would love to definitely add Zomato at this point.
Prakash, on insurance in particular, so there is no relief for the insurance companies because the decision to lower the GST tax rate on the insurance premium has been deferred for now till they hear more from the IRDAI. Now, stocks like SBI Life are down 27% from its recent highs. HDFC Life is down 18% from its recent peaks. How would you approach insurance companies now? You're on mute.
As we went into this event of the GST Council remark, the anticipation was quite clear that there's nothing much that could come, which is very favorable. But the drop in prices on most of these stocks, the price correction that you see, has been for multiple reasons. Okay, one is of course, the product mix is something which is likely to get under a fair degree of introspection in terms of what is allowed positively by the regulator, what is not. And RBI's dispensation in terms of the bank assurance support is what's impacted these two companies which you mentioned, because there is a significant dependence on that channel. My take on insurance is any opportunity which is buying into these companies because of an event which is short term in impact, which is temporary, which is transient, is absolutely amazing. You buy into these businesses because of the long term orientation that they have and the kind of TAM that they're looking at addressing over the period of time. Max Life, for instance, is very well poised for something where they have a strong channel which is from their advisors, along with the bank assurance of access. So you will have to pick and choose some of these businesses, but always make sure that you have a basket of at least 3 stocks out of the sector. Don't depend only on one story to narrative to kind of build your portfolio. But a couple of these names definitely make sense to buy after these dips, because things will look up in the Jan, Feb, March quarter, which is always very promising.